good here? Are we good here? Excellent connection. Okay, man, I just did a live stream for 20 minutes doing exactly what I'm going to do right now, and I left it like this so you couldn't see the charts. I can't believe I did that. Here we go. You can see the charts. What a fucking dumbass. I'm fucking stupid, but I'm learning. So I'll stay positive. Hopefully people enjoy this video. We're going to do an index overview and go over my focus list for the week, personal technical analysis. Right here, let me give you a breakdown. The yellow is my 8 EMA, the blue's 21 EMA, this is the 50, this is the 200. And the EMAs are really vital to my swing trading decision making and also my day trading, but I use different period EMAs. So something I learned over the past month was I was rocking swing trading the beginning of the year. And I mean, it was quite easy as the markets were just going up and up. But over the past month, I got into a swing trading drawdown because I was taking trades, entering new swing trades that were setting up nicely, but the overall indexes were unhealthy, chopping, doing this. So imperative for me to take swing trade entries, all the indexes, the IWM, the Qs, and the SPY, they must all be above the 8 and the 21 EMA. And it's a good rule to have. It keeps you from trading chop. It keeps you from entering trades that the indexes are just going to shit on you the next day. So we got the IWM, it's above the 21, but testing the 8. A much needed pullback this week, really. This is not an index, it's Bitcoin. The Qs above both the 21, below both the 21 and the 8. So we got the IWM under the EMAs, the Qs under the EMAs. So no swing trades for me today. And the SPYs holding the 21 but still under the 8. So that's the indexes. That's my opinion on the indexes. I think we're in a healthy spot. It was much needed pullback, much needed rest. This week, day trading, I wouldn't say it was rough because I had 4 days where I didn't take a trade due to the indexes being all choppy. But today I missed a bagger. And let's go over it real quick because you have the trend line break on the daily for Facebook. This was the bagger today. Let's go to the 5 minute. You see yesterday's high day in this trend line right here, this level 285. 285 was the level to watch. So 285 was yesterday's high day as well. Going to the 1 minute. My personal scalping strategy is I want to see a clean level from the daily or from the 5 minute, preferably the daily. It has to be the daily, honestly. Just the 5 minute must be clean as well. So I didn't take this because I was just waiting for confirmation. Really, it was a mistake to not take this, and psychologically, I guess I just wasn't in the right place this morning. So my stop loss for my swing trade, for my day trading 1 minute scalping strategy, this would have been my stop. So I would have been in right here when this candle closed over 285, and none of this breached my stop. So I would have been holding through this, probably down a little bit because the way options move when you're going sideways, you're losing money. But I would have been able to ride this using the 5 and the 9 cross as my sell rule on the 1 minute. The 5 and the 9 are not on this chart because I use interactive brokers for my day trading executions. This is my swing trading for Thinkorswim. But I would have been able to ride this bad boy all the way until they crossed up here. Amazing. So I had 4 days this week, 0 trades, but I'm still learning, I'm still adjusting, still making new rules, because if you're really serious about this game, you're a student of the market. You're always learning. So that was just the bagger of the day that I didn't take. I already went over the indexes, so let's go over my focus list and how the stocks moved this week. CPE, I was looking for the flat top, got the close right here, I took an entry, but the indexes, when the indexes are unhealthy, it fucks up everything. So that's why I have the 8 and 21 as imperative entry rules. If the indexes aren't above the 8 and 21, nothing for me, not taking any swings. And I just added that rule very recently because I was up a lot the first month, and I gave back 50% of my profits. I'm still up on the year, but it doesn't feel good to get back profits, not one bit. So entered here, was stopped out. Nice chart, but I'll keep it on the list, I guess. Nah, actually, it's coming off the list. I'm sorry. I don't like it. Because, like, what type of... This is pretty unhealthy. Dips are nice, but I want to see more clear levels being built. Ideally, this 42.5, this 42.3, in like a week or so, it'll reject and consolidate a bit and form a nice flat top. So what I do is I'm always cleaning up my watch list, because I don't want an unorganized watch list. I only want tickers that are very active, that I'll be willing to enter if the indexes give me the setup, or are above the 8 and 21, and the stock gives me a nice setup, taking it. This was a nice reaction to earnings. So you have the earnings gap up, then the next day it held and did well. So if you're trading earnings, you need to have a really good plan. Personally, I think it's gambling. I don't trade earnings, but I like to be aware of them because the next day reactions can be very good. MGNI, this definitely deserves to stay on the list. See, I already did a video for 20 minutes, so I've been talking for a while, but man, I'm glad I'm glad I saw that. If I would have just left that video up, oh my gosh, but I'm so happy I noticed that now while I'm still in the mood to redo it. Like, good Lord. This is nice, the downtrend break, and then you hold the 50, you get higher lows, and you close. I'm really liking this thing. Maybe above. You see the wick right there? There's a wick. I'm going to go with the 52 level. Of course, the indexes have to be healthy, or else I have no business doing anything. But it deserves to be on the list. This is beautiful. I wish the indexes were healthy so I could have got in this thing, but what a nice chart. Really, you get the trend line, you got wick, close, close, close. The entry would have been today, but indexes are not above the 8 and 21, so no entry. I wouldn't have entered yesterday because you see that wick right there. It would have been a anticipation entry, not a confirmation entry. VTNR. It's acting okay. Has a gap at 1. Let me draw it for you. Oh my gosh, I don't know how I got that. Got it. There you go. Your gap right there. So above 165. Gaps are very important, especially on the daily. I'll even set an alert. Facebook, beauty. With the indexes under the 8 and 21, I can't get too excited about I can't get too excited about this pennant, not at all, because when the Qs look like this, Sure, Facebook is showing relative strength, but could wake up Monday to continuation of this trend. And next support would be like 305, 300. No point in taking unnecessary risk. What was I just on? Okay, CGC. I like this. Deserves to be on the list 100%. You have a little gap right here, 35.7. Resistance 36.5. But above that 36.5 spot, we got room all the way up here. And I believe, yeah, when this went crazy a couple of years back, I was just getting into the market. But I like to, you see, I got a max monthly, 3-year weekly, 1-year weekly, 5-year monthly. It's important to be able to look back. Here, I'll show you a good one that MU, this looks beautiful, but what you don't realize is you have to go all the way to fucking 2000 to see the 97.5 all-time high, which is quite ridiculous. But look at the stock market, man. This is what can happen. You gotta be aware. This is, what was that? That was just terrible. Then you got to be able to manage risk, because things go up, but they also go down. Stocks do not only go up. People who say that are absolutely fucking delusional. Crazy motherfuckers. Sono. I like this. Indexes need to be healthy, but a nice mover, a nice uptrend. Growth name. Check the 3-year, nothing special. Nice name though. I think it deserves to be on the list. This is a high growth name. The chart doesn't look amazing. Does not look amazing. But since we're in that growth atmosphere right now, I'm going to keep it on. IAC. This is a clean chart. Very nice. I would like it over... I got an alert at 246, or actually, sorry, it's at 245.5. Let me get a horizontal line in there just to make things a little clear. Trend lines are helpful, but for me, the horizontal breaks are most important. Definitely on watch next week. This IAC, it might be, if the indexes get their shit together, this might pop up here and then just keep going. So we just got to be patient for the indexes to be healthy, to put on swing trading risk. You got a gap right here. It's not a huge gap at all, but this is a nice little pennant forming. Man. Maybe above. It would be pretty risky to take it, because you see wicks, you got resistance. I'm deleting this off my list, honestly. Too much resistance, too much yada. THC, this is a beautiful uptrend. Check how it looks on the weekly. I think it has to stay on my list because we've been in a pretty rocky area lately, but this hasn't taken too much damage. So it's showing me some nice relative strength. It's quite impressive. Already went over MU. Focus this, yep. Lift. I like this. Nice consolidation. I just took Uber off the watch list, but this is presenting much cleaner price action. So something I have a rule in is don't play same sector names, because you don't want to have unnecessary exposure. And I've done that before, not realizing. So Uber and Lyft are the same type of sector, and in my opinion, this is choppy price action. But when you look at Lyft, wait, let me just click on this shit. When you look at Lyft, much cleaner, a much cleaner trend. I like that. So those are little observations that I think are important for new people to think about. Feng, I like this over the $2 mark. Beautiful. Need the indexes to be healthy. AMAT, a little pretty volatile, but if it can close above 120 with the indexes acting well, look at the nice trend. Has room. So right now it's nice to see bases being built, because for a while we were just in this land of like really short bases and stocks would still break out. I'd rather see things consolidate and really form nice patterns rather than like a FOMO environment. Fear of missing out for anyone who doesn't know FOMO. This looks good over 70. You get the trend line, close, 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 close. A lot of resistance at 70. 70 is a whole number, but has risk reward up to 93 and then above 93, so worth having on the list. Cisco is a beauty, not on the daily, but on a longer term time frame, a freaking beauty. Look at this, 3-year weekly. Yeah, room up to 58. 50 is a key level, but you get a close, a bunch of closes, wick. You just want to see the trend line break in confirmation with the indexes acting healthy. I would probably take it over 49.75. This was a very nice base being built. I have a personal rule not to buy stocks that are in bases, because look what the fuck happened. It gapped down. So if you're thinking, oh, I'm in this nice base, it's going to break out very soon, then you wake up and, personally my stop loss would have probably been like here or something. You wake up and it's freaking 3% under your stop. Dude, that's why you don't buy stocks and bases. Well, I'm not telling you that as like advice. I'm just saying personally, I like trading breakouts because the confirmation. I wouldn't say I'm impatient, but I don't know if I already went over this. I think I did, but you get this confirmation close on the 1 minute. This is my day trading strategy. And my entry is here because it confirmed over a key level 285. 285 is clean trendline break on the daily. Risking under here. Sure, it does this, but being a breakout trader, you don't take unnecessary risk. It's like, I know if this stop loss 1 minute low is violated, I was wrong, I was incorrect, and I take my loss. It'll be different due to what your position sizing is, but I know in my day trading and in my swing trading where my losses are, unless I get gapped down on overnight, like something crazy like the LOI. Unless that happens to me, I really look at that. Closes up here. You're like, okay, it'll probably break out very soon. 211. Wake up. Opens at 194. What's that percentage? Oh, I can't see it. Here, 1 second. Showing you some tricks that took me a while to learn on Thinkorswim. So 9.3% move. I mean, that was 190, but still, you're down 8% just because you bought a stock in a base. So I hope you learned something. I tried to be very clear and explain my methodology. I'm not rich. I'm not like a financial advisor. I'm just trying to help people through the journey and pick up on little things and shorten your learning curve. So if you learned anything, if you like any of the technical analysis I explained, the 8 and 21 strategy, freaking drop me a like, show me support, and I'm going to be doing psychology lessons on Wednesdays, market wraps consistently on Fridays, and I'm going to be doing Sunday focus list reviews showing you what I'm looking for the next week. So right before I end this, I wanted to tell you guys about some of my favorite podcasts that have helped me educate myself and survive in the markets. So I would say Macro Voices is very good. It's hosted by Eric Townsend. He's awesome. For personal health, Optimal Living Daily. It's very good. The Memo by Howard Marks. He's a wise man. They're pretty short, like 15 to 30 minutes, but he gives you a very good outlook on the economy and a long-term view. He's super smart. Invest Talk is another very good podcast. Swing Trading the Stock Market with Ryan Mallory. I would recommend that if you're into swing trading or technical analysis. I spilled. The Investing for Beginners podcast. I manage my own Roth IRA, and almost everything that I learned, it was from the Investing for Beginners podcast. I dollar cost average. I made a video on that. Check it out if you're interested in controlling your future. And no one can time the market, but what you can do is put the same amount of money into the market consistently, and whether it's going up, whether it's going down, you're going to be getting pieces of the market. So here, let me tell you why it's important to do that. Because you look at the max of the overall market, the SPY. This is what, 95, $48. Even when things crash, you get a crash, goes to 86 at the lows, goes to 73 at the lows. Look where the fuck we're at right now. This is the importance of dollar cost averaging, because the market's going to keep going up. Sure, the market, look at this. We're so overdue for a crash, even though coronavirus bullshit happened and we crashed hard there. We're so overdue for another crash, but we're going to keep going up. Businesses are going to keep growing. The dollar might change to a new currency. We might have a digital dollar in the future. I don't think it's going to be Bitcoin, but I think the government's going to come out with their own digital dollar that, they could make money off rather than Bitcoin. It's like government can't do shit with Bitcoin. But I think that's all I got. Let me know if you have future video recommendations. Tell me what you like, what I can improve. Don't be a fucking dick. Nah, just kidding. If you don't like this, just act like you were never here. And if you do like it, just give me some insight. Give me some feedback. I appreciate it. Appreciate anyone tuning in. And I hope I could help you learn something. I'm going to be here for a while. I'm definitely going to be in the market for a long time because I manage my risk and I'm not a fucking clown. So, thank you for tuning in. Enjoy your day and be sure to feed the brain this weekend. Get some fresh air. Have some good conversations with some of your friends. And let your family know that you appreciate them because we're only here on this planet once. So make the best of it, all right? Thank you.